All right. Well, thank you for that warm introduction, Raleigh, and thank you to Trading Pub for having Pristine here. Um, just want to say thanks again for having us, and here we go. All right, guys. So, how you can achieve an edge trading just like the professionals. You know, Raleigh gave me a great introduction already, and hit the nail on the head with a lot of what we look to do here at Pristine, and it is shorten the learning curve. Um, and we do that through cutting through all the BS, all of the esoteric stuff out there, the indicators, and I'll talk more about that here in a little bit, but really getting down to what matters most. And if I can just get a little group participation here, what is it that all indicators are based on? What is it that all indicators are looking at? You guys tell me. The more participation we have here, the better it's going to be for you guys as well. So I do appreciate you guys helping me out here. And exactly, yeah, as you guys are saying, price, right? Price and volume. That's what these indicators are all looking at. So if we can really understand price information and price movement and what really matters, right? That interaction between supply and demand, and where was the last area of demand, or where was the last area of supply. If we can embrace that information and truly understand that, we can begin to understand where price is likely going to go in the future without the need for any of these subjective tools, because as you guys said, they're all lagging. They're all after the fact. So in reality, what they're doing is giving me a later entry than what I could have had if I understood what really mattered. And that's one of the things we're going to talk about here today, and specifically as it relates to trading Forex. Now, that's not to say that what we talk about today is only relevant for Forex, because as a matter of fact, it applies to anything you're looking to trade: ETFs, stocks, futures, whatever. In fact, if we have some time here, I'll be happy to bring up some stock charts for us to look at as well, and I'll show you that it really makes absolutely no difference, right? What we talk about today can be applied to anything you're interested in trading, okay? So having said that, I also want to just quickly make you guys aware that the president and CEO of Pristine, Greg Capra, is going to be hosting a webinar later today at 4:15 after the close of the market. So if you want to stick around or join us for that, we'd love to have you. You can click on this link right here to sign up, or we can post a link for you a little later on. Okay, so Pristine, I'm sure you guys all are here to learn something, of course, and I promise you will learn something here with me. But it's just as important to be learning from someone who's been around, or a company that's been around. I mean, not just somebody that established themselves yesterday. And Trading Pub is great at putting together the very best lineup that they can. And so we are the recognized leader in education from, I mean, basically everybody in the industry: Trading Pub, Benzinga, Trader Planet, Lightspeed. Our courses have been reviewed by Stocks and Commodities. So the reason I say this is to make you a little more at ease with the fact that this is a company that's been around for, you know, um, and there's a peace of mind that comes with that. So, having said that, I found this quote, and I feel that it's extremely appropriate to trading. Opportunity is missed by most people because it's dressed in overalls and looks like work. Does anybody know who said that? Anybody know where that quote is from or who that quote is from? No, no, nobody's heard that. No, Thomas Edison, right? Edison's the one who, at least for my research, has been uh, the source of that quote, and it's so true. I mean, here we are as traders, and we're all drawn to the market because we want to make money, right? Obviously, and it's a lot harder to do when we really sit down and try and achieve those goals, right? Try and make that money. And so people are turned off by that, right? I mean, let me just do a little poll here. Yes or no? Trading has been harder than you originally anticipated it to be. Yes or no? You guys tell me. Absolutely. Absolutely. There's nobody in here that's going to say no. But I want to applaud all of you guys for being here. I mean, it's harder than you expected it to be, yet you're still here, yet you're still determined. So congratulations to you for not giving up, because you obviously are willing to put in the work necessary. You're here trying to learn something new. So again, good on you for being here and for staying determined and diligent in achieving your goals. Well, you know what? There are some things which may seem illogical when it comes to trading, but what I hope to do is over the course of the next hour, demystify things for you, at least in part. I'm going to do my very best to make things a bit more logical, make things seem like, they do make sense, because in reality, if we really focus on the price patterns, if we try to forget about all the other things going on out there, all the other economic events, price and the patterns are what ultimately drive the market, a stock, a Forex pair. It really doesn't matter. And so that's my goal here for you today, is to make things much more logical. And it all starts with psychology. I'm not going to go through every single one of these here, but it all starts with psychology. You have to have a plan. What should that plan include? Well, of course, it should include what patterns and strategies you're going to look for to make money, but also which ones are you going to avoid? Which ones are you going to stay away from based on you as a trader and your personality, right? I mean, let's just say, okay, you look at how I trade, and I'm not a scalper, right? But if you are, right, we're going to have different plans. So while you may feel that Pristine is the right place for you to learn from, you aren't going to want to necessarily duplicate my plan, because we have two different styles, and there's nothing wrong with that. There are plenty of ways to make money in trading. So I'm not going to sit here and say that you have to execute my plan as I have it written out. You have to have your own plan, and we'll give you all the tools that you need to be able to put one together. Beyond that, what are your goals? Right? You have to have goals as a trader, and I don't mean, yearly goals. You should have a yearly goal, of course, but to just start 2015 and say, you know what, I'm going to make six figures this year trading. Well, you know what? That's a great goal to have, but how are you going to get there? Do you have an approach to measure your success over the course of a week, over the course of a month, over the course of a quarter? And how are you going to measure your success and know that you're on track? So you have to have goals. You'll notice here that I don't have daily goals. I don't like daily goals. How many of you guys have daily goals, by a show of hands? Does anyone here have daily goals for their trading? I want to make X amount in a day. Right? Yes. Only Rick? Oh, all right, there you go. Carlos, okay. Dave says no. Just make it to tomorrow. There you go. Well, you know, I don't like daily goals, as I said, and I'm not sitting here trying to tell you to say that you don't need them or that you shouldn't use them. What I do want to point out though is that daily goals can be limiting. They can cause you to make decisions based on things that are not important. In other words, they can cause you to make decisions based on the money. Let me give you an example. Let's say that you have a goal to make, okay, $200. Now here it is, 2:30, 3 o'clock. We're coming up on the last hour of the day, right? U.S. markets. And you're up, say, 150 bucks, right? So you're $50 short of your target. You don't have any open positions right now. So what is it that you're likely going to do? What is it that any new trader, for that matter, is likely going to do? And I'm sure we've all been there. Screw up. Yeah, we're going to force a trade. We're going to settle for something less than what we've determined to be the best. And inevitably, right, as Philip said, it's going to probably cost us money. And then instead of being up 150 bucks, maybe we're only up 100 bucks, or maybe we're up 50 bucks. And then we're going to start forcing even more trades because now, hey, I'd rather be up 150 bucks than only up 100 or 50. And inevitably, we force another trade, and now we're down money. So that's why I don't really like daily goals. Now, you might have a rough idea of what you'd like to make, but it's better to have weekly goals. And you can break that out and say, okay, well, based on my weekly goal, I need to make this much on average per day. So you have to be careful with the goals that you're setting to make sure that they're not causing you to make mistakes or force any unnecessary pressures on you. Other things to consider, what are you going to trade? What patterns? How are you going to manage those trades, right? Do you consider different market conditions? You can't expect to get home runs when the market's just going sideways. I mean, you can't use pivots for management. You can't be looking for big, tremendous moves in a market environment that's going sideways. So you have to have rules in place for different market conditions, different stages, as we call it, right? What are your habits, daily habits such as breaks, staying hydrated, etc. And also make sure you're doing your statistical analysis so you know who you are, right? I'm not going to go into these, but psychology, as we all know, plays a tremendous part in our trading success. And to just expand that idea one further step, if you are bouncing from one place to another, if you're trying to, piece together an education from what I say or from what someone else says and what they say and what this book you heard from, you read about, it's going to be very difficult for you to find success because those ideas are not going to gel together. They're going to be contradictory for the most part. So you have to find one that makes sense to you, stick with it, and be confident in it. That's one of the best ways to have, a strong sense of psychology when it comes to trading. Now, before we continue, real quick, guys, it is possible to lose money trading. If you don't know that, you'll find it out pretty quickly, right? But that's part of the game, right? That's part of what we do. We have calculated risks. We take risks where the reward is larger than the potential risk. I mean, it's like opening any business. Anytime you open a business, there's the potential to lose money. I mean, there are employees, right? Employees can cost you money at times. Right? A trade is like an employee. If it's costing you money, well, there's a certain threshold where you say, you know what, this isn't working out, and you cut that relationship. There are other times where employees are making you a lot of money. and you want to embrace that relationship, cultivate it, and see how far you can take it. So trades are no different. Right? Trades are the exact same thing. As I said before, there's a ton of indicators. Here are just a few of the more common ones: MACD, trendline, RSI, Elliott wave, stochastic, Bollinger Band. The list goes on and on. Indicators do not work. Plain and simple, you do not need indicators to be successful. Let me just point this out. Right? How many traders fail? What's the going number? What's the going percentage of traders that will fail? 90+% of traders will fail, unfortunately. And a lot of it has to do with the fact that they again, they don't know where to begin, which is understandable. They don't know what barriers they're going to run into, which again is understandable. And so much of what they're going to hear tells them that they need these indicators in order to be successful. Well, how many traders, you guys tell me, how many traders use indicators? Even the ones that say that, they focus on price, the majority of them are using indicators as well, right? So most traders, again, 90+% are using indicators. So the next question I have is, well, if 90+% of traders are going to fail and 90+% of traders are using indicators, it would seem most logical to me that the indicators are the issue. Because again, indicators, who's going to use this setting versus that setting, and is it going to work for the volatility of the current market? And what about when the market volatility increases or decreases? Is it still going to be as effective? So yeah, the bottom line, as you guys said earlier, is price and volume. That's what matters. And that's what you're going to see. I mean, not so much with Forex, but when I show you these charts, excuse me, yeah, lunar phases, exactly. It's based on price, supply and demand. You and I, right? We move the charts. That's what we need to be able to understand. Well, I don't own Pristine, so yeah, I mean, for me, yes. I'll show you two trades that I have open right now. Um, and we'll look at them when I bring up some live charts. So I'll show you those trades. But yes, I mean, I wouldn't be sitting here talking to you about this method if it didn't work. And I mean, we can look at anything. I mean, we could look at stocks, like I said. I mean, you could pull up any chart going back as many years as you want, and this is relevant. It works. So what is Forex? I'm not going to spend a ton of time here, guys. I'm going to go through this fairly quickly. And if you have any questions about how the Forex market works, you can email me. Happy to answer any and all questions you have. Just put my email in here. Exactly. If you can chart it, we can trade it. Exactly. So if you have any questions offline, you can send them to me. But basically, Forex is the foreign exchange currencies market. What you're doing is you're trading one currency against another. As an example, if we have the euro and the US dollar, we're trading the pair known as euro USD, right? We're trading the euro against the dollar. So if we were to go long this pair, we would be looking for the euro to rise and the dollar to fall. Now, anybody that's familiar with Forex knows the exact opposite's been happening. The euro US dollar pair has been getting absolutely beaten up. And it's now down to a fairly significant support level, and it's trying to stabilize. But there was a tremendous opportunity to make money to the downside on this particular pair, which we can look at in a little bit. Why should you trade Forex though? Right? Liquidity. The liquidity is second to none. It is the most liquid market in the world. Just to put it in perspective, right, the US stock market does $191 billion in daily transactions. The futures market does almost half a trillion dollars. It does $437 billion. Now, these are tremendous numbers. These are tremendous numbers. These are tremendous amounts of money. But when you compare it to Forex, Forex does $4 trillion in daily transactions. So again, in terms of liquidity, there is nothing that compares to Forex. Why is that important? Well, because you can get in and out at any time, and it's a 24-hour market. So it doesn't matter where you live or what work hours you may have, right? Maybe we have other jobs, right? Maybe we only can trade part-time. Well, Forex is an excellent opportunity. In fact, Forex is probably an even better opportunity than equities. You know, the US stock market, most people look to trade the first hour of the day if they can. When it comes to Forex, right, the ability for the Forex market to trend is incredible. And I'll show you examples where there have been some great trends where you could have made a lot of money. And you don't have to worry so much about the day-to-day gap because it's a 24-hour market. So here you can see the overlap between these times. London and New York, they overlap for a period of a couple hours, and that's going to be the more liquid time, excuse me, to trade the Forex market. But there are plenty of other opportunities that set up throughout the day as well. So it doesn't matter where you are around the world. Forex can be extremely profitable for you. Now, let me just catch up on some of these questions here before I continue. If we can't trade, well, I mean, the question is here, if you can't make money in $1 billion market, what's the rationale that you can make it in $1 trillion market? Well, the more liquidity that there is, again, the more fluid movement that you're going to get. And you know what? Sometimes just the simple change of what you're trading can make a tremendous difference in your success. So the fact that the Forex market does, you know, trillions of dollars versus billions of dollars in daily transactions really isn't relevant in the sense of, well, you know, of that question. It's the fact that the liquidity is there to trade all the time. And like I said, sometimes just changing what it is you're trading can make a huge difference in your success. You know, if you're more of a trend trader, Forex is, you know, almost perfect for you. And yes, it offers more opportunities, as Rick is saying. Well, yeah, the spreads can definitely work against you, and that's why, you know, we offer a prop program where spreads can be reduced significantly to where the spread is much more tilted in your favor. You know, there's still a spread, and we'll talk a little bit about that. The spread is basically your cost of doing business. So we'll talk about that. I can't figure out why so many traders don't like Forex. Yeah, you know what? I agree with you, Zoltan. I think that for whatever reason, there's this misconception about Forex that it's for the professionals and that it's more risky to trade Forex than it is equities. And, you know, guys, that couldn't be further from the truth. So if that's how you feel currently, again, it couldn't be further from the truth. I will say this, though. If you try to trade, the smaller time frames on Forex, right? A lot of equity traders will trade a 5-minute chart, a 1-minute chart. If you try and do that on Forex, you will probably get demolished. the majority of successful Forex traders are focused on the larger time frames, 60-minute, 4-hour charts, daily charts. So that's where the difference comes into play. And yeah, I mean, the manipulation that you talk about there, Gun, is going to be more susceptible. You're going to be more vulnerable to it on the smaller time frames. So if you can move away from them, I think what you'll find is the charts clean up in a way where that manipulation is far is greatly going to be reduced. So let me speed through this here because I really want to get to the charts. So again, it's a 24-hour market. It can accommodate any schedule. It doesn't matter where you live around the world, how your work schedule tends to be, but it's extremely customizable. The price action is more seamless because you don't see a gap, or it's less likely that you're gonna get a gap. There are times where with news events you can, but it's far less likely, right? Especially gaps that just completely change the overall picture. And again, there's enough liquidity, as we talked about, to get in and out at any time. So you don't have to worry about not being able to get out of a position once you're in it, no matter what the time of day is. And there's also lower costs. Typically there's no commissions because it's built into the spreads. So, and yeah, you have to do your homework, Ed. Absolutely agree with you. Some people, they'll just try and rake it in from the spreads and that's it. But you don't have commissions, right? The spread is your commission essential. Generally, no platform fees or data fees. So you can certainly bring your costs down, and as I said, with our prop program, you can bring those spreads down even more, and we'll talk a little bit about that. So let's look at some examples, right? I'm going to show you some charts that I've captured from the past, just to show you, what possibilities there have been, and then we'll look at some live charts as well. So here you have US dollar, Canadian dollar. This is the daily chart. And here, going back to April, right? Plenty of opportunities to have shorted this particular pair. After a sharp reversal and move lower, you get a retracement right here with multiple amplifiers. It moves lower, goes sideways, tries to move up off this support level. It can't do it. Topping tails indicate this is going to drop. You short the breakdown. Here's a 167 pip move, or what would have been almost $2,000 if you were just trading one standard lot. No Bollinger Bands. I mean, this is really all I use when trading Forex. Price, I actually use 2 moving averages, but that's it. I mean, you really don't need anything else. Anything else that you might look at is just to confirm what I can already see on the charts. Now, before I continue though, one of the things that we really have to do or understand is that when we look at candles, we can't just look at them and say, oh yeah, I understand what it's saying. Oh, here's a big green candle negating a red one. It says it should go up. Well, we have to be more intimate with the way that we look at and read these candles, because they're telling us a message about the relationship of supply and demand. And that's what we really need to understand, is that every single candle that we look at, regardless of time frame, is trying to tell us something about what's going on in that moment. And if we can take this example here, this candle that my arrow is pointing to, this was at one point a green candle pushing up, right? It was a green candle that was trading up at the high of the range, and it took out these prior highs. This is all happening off of an area of support. That In that moment, when it was trading up at these highs, traders were thinking very bullish about this. As it finishes here, it closes with a topping tail down on its low. Traders got trapped. The attempt to move higher failed. This is all happening within a downtrend. That information alone is powerful enough to say, hey, this is going lower. This is going lower. The moving averages that I like to use are the 8 and 21 exponential moving averages. But it really, at the end of the day, it doesn't matter which ones you use. You can use a 20 and a 40, whatever you might want to use. It's not that we're using these moving averages to make a decision, right? I'm not going to say, oh, here's a move up into the 8 exponential moving average, so let me get it short. That's not what we're doing here. We're looking for patterns. So is a moving average an indicator? It is. However, it is one of the most versatile and useful indicators out there. And what we do is we use it in an objective way. So like I said, I'm not going to look at this and say, oh, here's a retracement into this moving average, let me get it short. No, because a moving average is just, it's a line on a chart. It's not support or resistance, but it can help smooth out the information. And if used in an objective way, it can be very helpful to me. But I'm not using it to signal any long or short opportunities. Here's pound US dollar. Now this is a pattern which we'll talk about called the pristine buy setup. And so I will explain this in a little more detail, but as you can see here, uptrend, pullback, 496 pip move, or almost $5,000 in about 2 weeks time. Here, this is more recent. Here's pound US dollar. This is up until today when I captured the chart. Here you've got a breakdown under these lows. I mean, and again, regardless of the moving averages, right? I mean, it doesn't matter. This is trending lower. It's staying weak. Green candles cannot follow through. Short the breakdown. If you shorted this breakdown, you could have been up over $4,000 on one standard lot. So it doesn't have to be difficult, right? You just follow the trend. Think about what this topping tail was, as I said before, breaking out over these highs into resistance. I don't care that it also hit this moving average. It really doesn't matter to me. But this was a green candle breaking out over these highs into resistance. Sellers came in. Bam. Sell it short under these lows. And then you apply your management rules. Now, you know what? This is a daily chart. I've shown you a couple daily charts. It really doesn't matter what your time frame is. But the thing is, you should be looking at multiple time frames. Why? Because, well, let's say that you miss this breakdown on the daily chart. You don't get any other opportunity from here. You don't get any other opportunity from here. So I would be doing you a disservice to show you only one time frame. And that's part of the beauty of the Pristine method, is that it works on any time frame. It doesn't matter. So here, drill down to the 60-minute chart. Let's say you missed the initial breakdown, which is right here. Oh, here's a little retracement into resistance. You can short that. That's a pattern we teach. You could short this breakdown here or this one. And so there are other opportunities to refine your entry or get on board an already moving train, so to speak, if you can utilize multiple time frames. Let me just read this question. Nearly 24-hour market. What are the hours with the most liquid volume? Yeah, as ZF said, during the London and New York overlap, that's when it's going to be the most liquid. So from around 11 or 8 o'clock Eastern to around 11, 12 o'clock Eastern is when there's going to be the most interaction, the most volume. But having said that, outside of those hours, especially later on into the day, I mean, like now and as we continue on into the evening hours, there can be a lot of new opportunities that set up. So while you may have the most volatility during that time, a lot of your longer term plays off of, say, a 4-hour chart would be setting up in those, outside hours, if you will. In this chart right now, I would not be doing anything. There was an attempt to move lower over here that failed. That's pushing us up. And again, if I go back here one slide, the daily's down multiple days. It's likely going to need to correct. Whether that means it's going to retrace or go sideways, time will tell. But I would not be doing anything with this here right now. What pairs are the best? I mean, definitely the US dollar pairs. They're going to have some of the highest amounts of overall activity and volume. So those are some of the best ones. I have about 20 different pairs that I look at for various opportunities. As far as the cleanest trends, it really depends on the chart pattern. I mean, the dollar JPY pair that had been trending higher really well, and I'll show you that. But it really depends. So let me bring up some live charts since you guys are asking. Let me do that. Take this down here for a moment. All right. All right. So can you guys see the 4 charts that I've got up there now in the app sharing? I see them on my end, so I assume it's good for you as well. All right, awesome. So here we've got 4 different pairs, and these are all on the 4-hour time frame. Right? These are all 4-hour charts. And so here you've got Euro US dollar, and like I said, it has been trending lower beautifully. Here you've got pound US dollar, which we were just looking at, and we were looking at it on the hourly, so I'll change it here for us. Right? And as you can see, it's still struggling to move higher, which makes sense, of course, because it's in a downtrend. But it's trying to carve out a bottom down here, and it's trying to carve out a bottom down here. So at this point right now, I really wouldn't be doing much of anything. I'd just be waiting to see what happens at this point. But the downside is limited and the upside is limited due to the downtrend that exists. Is trading currency futures as smart? It's whatever works for you, Sean. If you can chart it, I really don't care what it is. If it's got good volume and it moves, there's opportunity there. So, again, Euro US dollar, been moving lower. The blue line is the 8 exponential. The red line is the 21 exponential moving average. And, like I said, they're more of a visual tool than anything else. As far as the 2 setups that I mentioned to you, and let me show you here. One of them you can see right now on the chart. You can see here, this was a long position right here that right now it's been coming back in, but we'll see how it sets up. I'm looking for a little bit of a transition here, and so here it is. You can see, right, here's this one. This one's down 40 bucks at the moment, and the other one that I have is actually up almost 500 at the moment, and that one is on Aussie dollar JPY. So I'll show you that one as well. Let me pull it up here, Aussie dollar JPY, and we can take a look at that. And if I'm going to show you that setup, I'm going to have to scroll this back a little bit because it was taken a little while ago. Oops. And so you can see here, this is where I took Aussie dollar JPY short. I sold it under the base here, under this breakdown, and just holding on to it at this point, right? It was a simple breakdown under these lows after multiple attempts to move higher failed. You can see it's moved lower beautifully, retraced here, and now it's, it's come back down to this low, and we'll see what it does at this point. But now, the trade's working for me. So, I mean, looking at this setup here, is this something you guys could see yourself doing, shorting a breakdown like this? I mean, it's not hard to see this, and I don't have, outside of these two moving averages, I don't have anything else on here. There's no Bollinger Bands, there's no MACD, fib levels, none of that. This is the essence of chart reading. This is what matters. You don't need anything else. If you can understand price, I mean, and you could have shorted this breakdown here. You could have shorted, the retracement back up. Now, this could have stopped out. I mean, this could have been a little whippy in here, but they're not all going to work, right? They don't all work. But then it broke down again. We'll see where it goes. What do you mean by visual tool? Well, when I look at moving averages, right? When I look at moving averages, they're just there to help speed up the analysis, right? I'm not looking at them to give me any kind of a signal. I'm not looking at them to give me a signal to say, oh, you should be getting long here or short here. They just help speed up the process. It's a visual tool where I can see real quickly who's in control. So that's what I mean when I say visual tool. Now let me show you some other pairs here. A lot of things are trying to stabilize at this point, so there's not a whole lot that I can do at the moment as far as placing live trades, as much as I'd like to. I mean, this one I just took earlier today, but as much as I'd like to, just do a live trade for you guys, like I said, things are just trying to bottom out. Not a whole lot of anything out there that's really that exciting. Just looking at some other charts here. Aussie dollar JPY trying to move up here as well. As far as stochastics, I mean, I look at any of those indicators in the same way. As far as indicators in general, I don't look at them. I don't worry about them because again, they can be so easily manipulated that that they're just unnecessary, and they're all focused on price and volume. So if you can do that, if you can read price and volume like we're doing here right now, that's all you need. You don't need anything else. Right? You don't need anything else. The red and the blue lines are the 8 and 21 exponential moving average. How do you trade? I'm not going to trade non-farm payroll. I don't trade the news. I will look for the reactions. I'll look for the patterns, but I'm not going to try and trade the news. That's not what I do. All right, Sean, awesome. I'm glad to hear that you'll be joining us. Well, exactly, Rick. That's exactly my point. Indicators are lagging, so what is the point? There is no point, in my opinion. Are there any pairs that you guys want to specifically take a look at? I mean, like I said, A lot of them are bottoming out. I mean, a lot of the US dollar pairs are trying to bottom out with as strong as the dollar has been. Well, when it comes to Forex, you don't have volume. I mean, you have volume, of course, but you don't really look at it as you would with equities. Right? Okay, US dollar JPY. Let me bring that up. So here's US dollar, and I'm just going to blow it up here. We'll have more to look at. US dollar JPY. I mean, this had been trending higher very nicely over here, right? It had a nice trend higher. I mean, let me show you the daily chart, right? Check out this move. Look at that move up on the daily. I mean, you can't tell me that you wouldn't have been able to find multiple opportunities, if not from the daily, definitely from the 60-minute chart or the 4-hour chart, intraday opportunities, or buy this breakout, buy this pullback. Here was a little what we referred to as a transition. You could have bought over here. So there were a tremendous number of opportunities to be had on this move up. Right? Now things have started to get a bit more volatile, more sideways, not much going on. So we sit on our hands. We wait for more information. I go to the 4-hour chart, whole lot of volatility here. Right? This isn't where I'm really going to be seeing too much in the way of action. Right? I'm not going to be looking to do too much with this. It does look in the short term like it's going to be moving back to test the top of this range based on these bottoming tails and the inability to move lower earlier. But at this point, I mean, it's not, there's not enough here for me to take a position. The 4-hour chart or 2-hour chart? I like the 4-hour chart personally. But when it comes to time frames, Rick, it really doesn't matter. It's more of just visually what appeals to your eyes. That's what it comes down to. There is no perfect time frame. The hours that I trade, really, I do other things for Pristine, obviously, such as presentations, but because I use these larger time frames, I'm able to check every 4 hours to see what's going on. So I mean, I'll trade middle of the night if I'm awake, or if something's setting up. Sometimes I do webinars in the early morning hours. So if I'm there, I'll check the charts. I'm really not specific to a certain time of day that I will trade. And that's one of the luxuries that these larger time frames provide me, is that I can look at them, see how they're setting up, and then just be very patient with them. As far as stop losses are concerned, it really depends on the setup, but just as a kind of general point of speaking, if I'm going long, a lot of times my stop is going to be under support, under the most recent area of support or resistance if going short. And so if we look here, this is a monthly chart of Euro US dollar, right? It's actually taken out this prior low from back in 2010. And so that's what I was talking about, and it's actually exceeded it now. Right? It's actually exceeded it now, so we're probably going to see a bit of stabilization here in the coming days. Trying to catch with all these questions here. Can you discuss how you exit the trade? A lot of times what I'll do, Lee, I think it was Lee, yeah, is just a bar by bar trail on a 4-hour chart. Or either that or I'll use support or resistance to trail my position. So, but for the most part, what I like to do is a 4-hour bar by bar trail. So if I had shorted this breakdown as an example, bar by bar would have gotten me out down here. If I shorted this breakdown over here, then I would have gotten out right in this area here, so it wouldn't have made too much. But that's what I like to do. As far as what qualifies as an entry signal, well, we have different things we look for. We have different patterns that we teach in the course. And in fact, I will talk to you guys, got about 20 minutes to go here. I will show you my favorite pattern and some of the criteria that we look for in that pattern. Can you give an example of a trade you are in? Well, yeah, right here is one, the Aussie US dollar. You can see the green line right here on the chart, right? That's where the entry was. My stop, which I don't have in the system at the moment, but it's right under here. And the nice thing about this platform, which you get in our prop program, it seems no one can understand charts too well. That's true, Rick, and hopefully I have been able to convey my knowledge of the charts to you, because that's ultimately all that matters, right? And that's so true what you're saying there, because a lot of times, since traders don't truly understand the charts, they use indicators as a crutch, right? They use indicators as a crutch to try and help them understand what's going on. But as we've all said multiple times, these indicators are lagging. If you can understand price analysis, if you can understand supply and demand, you really don't need anything else. So here you can see, again, entry on the breakout. Look, all I got to do, this is my stop. I can drag it right down here, and boom, there it is. That's simple. Okay. And then, as far as targets, I mean, with this setup, I would be looking for at least it to move up into test this resistance area. I don't particularly like to set hard targets. I would rather just trail the position. I expect more and react to less. Right? So as you can see, I really don't have anything in the system here at the moment, but I would be looking for it to move up at a minimum into this area here, 8209 on Aussie US dollar. And then the other one that I showed earlier, I don't know if you saw it or not, was the Aussie dollar JPY. And this is one that I had taken quite some time ago as a position short right here on the breakdown. And, at this point, just managing it, seeing what it's going to do. I mean, looking at the daily chart, you can see where I got on board, right? Again, you can see it up here, short the breakdown after it topped out, sliced through prior support. Now it's downtrending. And while we're getting a bit of a bounce here, it's coming back into resistance and really should just roll right back over and continue heading lower. So those are two trades, one that I took a while ago and one that I took, about maybe 4 hours ago. And you can see it right there. Do you use bracket or OCOs? No, I don't really do that. I mean, I like to sit there and not watch it, but I'll pay attention to what it's doing. If it doesn't start moving in my favor relatively quickly, I might start to tighten up the trails on it. If you want to email me, sure, you can email me. I'll put in my email. The Frank JPY. Yeah, we'll look at that here real quick, and then I want to switch back over to just going over my favorite pattern here. So as far as this pair is concerned, I mean, 4-hour chart, beautiful move down. You know, again, short the breakdown, retracement into resistance, boom. Plenty of opportunities, right? It doesn't have to be hard. Trading does not have to be hard. It doesn't have to be complex. In fact, it shouldn't be. Right? This is the 4-hour chart. You asked me about the hourly. Well, look at all these opportunities, right? Retracement into resistance here, breakdown under these lows here. Now it's just kind of going sideways, and we'll see what happens. I mean, as far as the daily goes, this really could drop some more. I mean, this is probably just a pause, what we talk about as a pause that refreshes. So I would be looking for this after a period of consolidating to continue lower. I like the MT4 platform. This is what you're looking at right now is the MT4 platform. I like this. You know, so as long as you can get some nice charts like this, I mean that's really all I need. I don't need all the bells and whistles with different indicators and things like that. I've not tried MT5, no. You really can't bash indicators because you know what? I'm not trying to bash indicators. If people can use them to make money, that's fine. But at the end of the day, all indicators are doing is focused on price. If you can focus on price and use price, that's all you need. And it in my opinion makes life as a trader much easier and much simpler. That's my opinion. I mean, again, if people can make money using indicators, fine. The majority of people, especially those coming to the markets trying to learn now as a new trader, cannot, as we talked about earlier. All right, so let me take down these slides here. The two moving averages, Paul, are the 8 and 21 exponential moving average. So let me take these down. We'll go over the slides here, wrap things up, and you know, I gave my email address. If you have any questions, you are more than welcome to email me. All right, so you should now once again see the slides. I'm going to assume that you can. So we'll just move along here. The pristine buy setup. Right? This is one of the patterns that we teach in the course. And it's made up of really just a very little requirements as far as the initial setup. We have other amplifiers that we look for to enhance the trade. And so it's made up of a 3 to 5 bar pullback within an uptrend. You can find this pattern in any environment. You can, I mean, trade it Forex, on equities. It makes absolutely no difference, and it receives 20 points within our scoring system. Right? We provide our students with a trade scoring system so that they can rate the quality of the setup of the play. You know, I mean, you literally will know the difference between, say, a 30-point play and an 80 or 90-point play. Obviously, the more points that you have, the higher the quality of the setup, the more amplifiers that it has. And again, it doesn't matter what time frame you are using to trade this in. It doesn't matter what market or instrument you're using to trade. This is something that can be found no matter what. And I don't know if I'm going to have the time to show you, but as a point, if you look up the stock symbol triple D on the 5-minute at, you know, just maybe at around 10 o'clock, right? triple D, 5-minute around 10 a.m. today, you will see this type of a pattern pulling back after the gap up. So the point is, it doesn't matter what you're trading from. It doesn't matter whether you're trading Forex or equities. And, again, if you want, I haven't even mentioned it yet, but as Yana put in there, if you want to get into our trading room, guys, where we're calling these patterns on a daily basis, click the link that Yana just put in. You can get a free 2-week trial to our trading room. The triple D example, Rick, is that what you're talking about? It's actually a pullback to support. So the gap up actually, in a sense, transformed that area which was resistance yesterday to support today, right, by gapping above it. So it's actually an example of moving up off of support. Right? Guys, this is just the table of contents. You can see it's extremely in depth. This is day one, talking about the basics, tools for the chart, trends, the strategies. And then day two, support and resistance, multiple timeframes, trade management, money management, and discipline. There's no stone left unturned. If you want to take a closer look at this agenda or table of contents, you can certainly do that. All you have to do is email me, or you can email counselor@Pristine, and they can get that to you. As far as the Pristine buy setup is concerned, again, it doesn't matter what you're trading or what time frame you're trading it from. Here you can see it right there. You can see it right there. Here's another 3 to 5 bar pullback into support. Here it is again. I mean, this is just one pattern. And the reason that this is my favorite is because it works for me, first of all, and that's the most important thing. But beyond that, I much rather prefer to buy a pullback to support or sell a retracement to resistance as opposed to buying a breakout or shorting a breakdown. Now, obviously, I don't have a problem shorting breakdowns or buying breakouts, as I showed you with those two trade examples. But if given the choice, this is the ideal pattern for me. This is what works for me. Right? Here's another example. Doesn't matter the time frame. This is a smaller time frame. Here's a pullback into the rising moving average and support. Boom, off it goes. Another pullback into support. You see here, it dropped below these moving averages, but that did not matter. What mattered was the fact that it came down to support, and that's where buyers stepped up. See, I don't need an indicator or anything to tell me that this is possibly oversold. It doesn't matter. I don't need that. It's into support. That's what matters. And then how do traders respond to it? So here you get a potent reversal back up. You could buy this breakout or buy this pullback. Here's another PBS. You buy it over these highs, stop under the low, and you manage, as I said to you before, I like bar by bar. Bar by bar, you get out up here, and then you reassess. As this goes sideways, it sets up a new breakout opportunity. Right, yeah, if you buy, buying breakouts, shorting breakdowns, you can definitely get caught in those wiggles, those failures. But if you focus on the trend of the larger time frames and what we refer to as price voids, you will be able to increase your success tremendously in terms of buying breakouts and shorting breakdowns. One of the biggest reasons for failure of breakouts and breakdowns is because they're right into either supply or demand. That's one of the most common reasons. Here's an example of a buy setup that failed. Here's an example of a buy setup that failed. I mean, not every one of them is going to work out. I'm not going to sit here and tell you that every single buy setup is going to work out, because that's simply not true. There will be losses along the way. It's how you handle those losses that will define you as a trader. And what happened there? So that's what we need to focus on. And so if I bought this buy setup and I entered above the high of the bottoming tail, the doji type bar, and I put my stop under the lows, all right, I get stopped out. But then if I'm objective about what's happening, it sets up a new opportunity. So here I lose a little bit of money, but over here I can make a significant amount more. So not only do I make up what I lost before, but I'm also making more. And you do that by having a reward to risk scenario, which is in your favor at a minimum 2 to 1. What do I mean by bar by bar? Well, basically what I mean is I'm going to track, if I'm long, each new bar's low. If that bar's low is taken out, I exit the position. If it is not, I stay in it. The blue and the red moving averages are the 8 and 21 exponential moving averages. So guys, Forex done the pristine way, trading done the pristine way, includes but is not limited to multiple time frames, trend analysis, an understanding of supply and demand, the use of subjective tools such as moving averages, but done in an objective way, understanding the limitation of a moving average so that you can make the most of it. Of course, focused on price patterns and intermarket analysis. I mean, you have to have a price pattern. Without a price pattern, the analysis is not complete. It's that simple. As I said to you before, spreads are a pretty significant thing you need to consider when trading Forex. With our prop broker, you can get some extremely tight spreads. I mean, if you're on the retail side, you could be looking at 2 pip spreads or more. What that means is that if you're trading 2 standard lots, you're going to start to trade down 40 bucks, right? You basically have to start getting movement in your favor to make money. This is not any different than a commission, really, right? Commissions are taken out on the back end. When you enter a trade with Forex, you start to trade down a bit. Now, on 3 trades, that's 120 bucks, which really doesn't seem like a ton of money, but if you think about this over the course of a year, that's over $30,000 that you're spending on just this spread. That's a lot of money to make back. So with our prop program, you can get spreads of less than a pip. I mean, you could see it here in the app sharing. So if you're trading the same 2 standard lots, you start to trade down less than 20 bucks. On 3 trades, that's $60, which is, this alone can save you over 50% over the course of a year. So even if anything else, this program can save you money on the spreads alone if you're a Forex trader. And so that alone is worth looking into. As I said before, guys, we have that 2-week free trial to our trading room. They're trading equities in there as well. I think somebody else was asking. That's really primarily what goes on in there, you know, because like I said to you before, I'm focused more on the longer term of what's going on. So there's definitely more action in terms of equities. But if you have any questions, you can always email me. But you can click the link, or at least I think you might be able to. But you can get access here, or click on the link that Yana posted. There's access to it there as well. And as a reminder, again, guys, we also are going to be having that free workshop, which is going to be given by Greg Capra, who's president and CEO of Pristine. And we'd love to have you join us there as well if you can. Vera, yes, I am in that room. All right. So does anybody have any questions before I wrap this up? Peter's not a Forex. Okay, well, you know what? Everybody has their own things that they like to focus on, and certainly Forex is not something you have to trade, by no means at all. You can email me. It's kurt@pristine.com. Now, the bottom line is finding something that you can trade that's going to make you money. That's why we do this, right? Is to make money. We have, I mean, as far as Forex goes, we have the Pristine buy setup, sell setup. We talk about failed patterns such as shakeouts, both to the long side as well as the short side. We have continuations, breakouts, breakdowns. So there's a tremendous amount of patterns. I mean, at a minimum, you're going to learn 10 to 15 different setups for long and short, along with the amplifiers that we teach to, like I said, go hand in hand with that point system. I do believe that every single one of these presentations has been recorded, and I believe, if I heard correctly, Raleigh had mentioned that they will be sent out no later than tomorrow afternoon, assuming everything goes correct with them. I know sometimes they can be a little finicky, these recordings with an Omnovia. As far as, I mean, Pristine really doesn't have a relationship with them outside of the fact that Pristine is not a broker. We provide them the traders, right? We provide them the traders, which is of course of benefit to them, and they're able to bring their costs down to you. All right, guys. Well, thanks again for the time. I do appreciate it. And like I said, if anyone has any questions, you can email me. And hopefully we see you with our presentation coming up a little later with Greg as well. Thanks again to Trading Pub as well. And I will be signing off here now. Talk to everybody soon.